Piet Viljoen, here we are using our new Cape Town studio, and you are interview number one.
Fantastic. That's a number I like, number one.
And another one. I mean, you and I, we've had a lot of number ones.
Yeah, over the years.
And you also number one to do 5 consecutive BizNews conferences.
That's correct, yeah.
Extraordinary.
Looking forward to that.
So this is what we're doing now. If you recall, when we started, we did it every 6 months. BNC 5, which is at the end of February, is going to be the last 6-monthly one. After this, it'll be annual.
Yeah.
And then we will be going back to the Berg every year, around about this time of the year, which will be the autumn. But you've been pretty involved in the mountain biking. Before we get into other things, I just got to
talk about the important stuff like mountain biking.
Yeah, and World Championships.
Yeah, well, that was triathlon. I went in October last year to World Champs. I qualified to do that, and my wife and I went to St. George, Utah, and I participated in the World Champs.
How did it go?
I had a bad day. I didn't have my best day out there, but it was still fantastic just to be there and to do the race and come like 800th or whatever.
So a big field.
Big field, huge thing. It's a massive thing. And the Americans put on a big show. They always do. So it was quite spectacular and a lot of fun. I didn't have my best day out on the bike and the run, but it was fine.
We've been to America together at the same time to the Berkshire Hathaway ATMs. Right. Are you still going?
I might be going this year. I'm thinking of going this year.
Why go back again when it's all live streamed?
Well, it's actually to go and meet some people. I mean, there's some acquaintances and stuff I've built up over the years, and one of my colleagues has some people he also wants to meet. So we thought we'd make a trip and go and set up some meetings and also go to the AGM.
Okay, so at one of the BizNews conferences, one of our community members said, I've got R1 million to invest. I'm so sick and tired of Piet Viljoen and Magnus Haystack coming with contrarian views. I want to see how they're doing. Now, Magnus will be at BizNews BNC 5 as well. When we last looked, which was a few months ago, you were absolutely killing it. But we've had an incredible switch in January, where the rand has fallen out of bed again. It's almost 18 to the dollar as we speak. And the US equities have risen sharply. I know you don't follow these things day by day, but have you still got a big lead?
I would suspect I still have a lead. I'm not sure where we are on that. I suspect my lead has narrowed somewhat, but I'm still ahead.
Help me understand what happened in January this year, because everything was going according to script until the end of December. And then suddenly big tech started shooting up and the rand fell out of bed.
So I can only speculate about what happened there. And it seems to me that a lot of people were anticipating recessionary events during the course of 2023. And I think a lot of people got short and hedge funds got short of a lot of stocks.
Meaning?
Because of, they sold them short with the hope of buying them back lower down. As you know, that's one of the activities hedge funds do. And also long-only investors sold a lot of stock during 2022 because of the economic environment, anticipation of a negative economic environment. And then when things, inflation started coming off in November, December, and things started looking a bit better and interest rate expectations moderated somewhat, it took a little bit of buying, and I think a lot of people were caught short and they had to cover their short positions. That's generally the reason why stocks move up so aggressively. I mean, Meta, Facebook, old Facebook, was up one day by 17% or something. I mean, that is not a normal move. There's something going on in the background, some technical aspect going on in the background. And I can only speculate that is the reason why. It's a short covering and maybe some long-only guys getting back into the market.
Now, our studio, our new Cape Town studio, is at the top floor of the Latitude, and one of the advantages is you actually get proper coffee and tea here.
And so coffee was very good.
Well, I'm going to have some of my tea now as well. But Piet, I've been reading from a number of commentators, including from the Financial Times of London and Bloomberg, that it's probably a good time to move away from passive investing. They even talk about peak passive back to active fund managers. Now, you're an active fund manager, so you're going to agree with that. But what is the logic to this?
So I think where they're coming from is they're saying that the indices have become highly concentrated. In South Africa, there's 2 stocks that make up 20% of the index, and the top 5 stocks make up close to 40% of the index. It's highly concentrated, and it's not as concentrated, but also concentrated in the US, where the FANG stocks make up a big percentage of the index, and the same in Europe and in other markets. And I think there is a sense that the second and third tier stocks, and stock markets for that matter, have been left behind and are far too cheap and undervalued. So I think there's a lot of secular trends coming together at this point in time. And I think I've spoken about this before. The one is we think there is a long-term uptrend coming for resources or commodity prices because of a number of factors, chief amongst which is the energy transition, which is happening globally and very rapidly in South Africa, I might add. But what's happening in South Africa is a microcosm of what is going to be happening globally over the next 5 to 10 years. And that is resource intensive. If you want to move towards renewable energy, it's highly resource intensive. And couple the fact with the fact that the resource companies, because of ESG and other considerations, have been almost prohibited from investing in expanding their ability to extract resource from the ground. You have a big supply-demand imbalance starting to happen, and this will take 10 to 15 years to sort out. So that's the one secular trend.
10 to 15 years.
That's how long it takes to build a mine. I mean, if you say you need more copper in 5 years' time, it's already too late for that, because you need to find the copper, you need to get the mining rights, you need to do the prospecting, you need to build the mine, and that takes 10 to 15 years to do. So that's why the commodity cycle is generally 10 up, 10 down sort of thing.
What about coal, though? We've seen coal stocks, Tungela, a coal player here in South Africa. Absolutely. And a international company like Glencore, which resisted the pressure to get out of coal.
And correctly so.
Doing very well.
And in fact, they bought some coal mines from Anglos and other people, if I'm not mistaken.
So what happens to coal in this transition?
So I think, a lot of people said a year or two ago that coal would be phased out within 2 or 3 years. There was no future for coal. But I think what happened in Europe over the winter proves that I think there is a life for coal for the next 10 to 20 years because it is a cheap source of sustainable power. And when you get in trouble like Europe did with energy shortages and high gas prices because of the Russian situation and other, the first thing they did was turn back to coal. I mean, even the Germans started using more and more coal in their energy mix.
Well, that's why we've got so many trucks on the road.
Exactly.
Trying to get to Richards Bay and Mozambique.
Exactly, yeah. So
off to Germany.
Off to Germany and Europe and other places as well. So coal it will be part of the energy mix for a lot longer than the market had been expecting 2 or 3 years ago. And that's still working its way through the system. But that is, coal is one aspect. I mean, steel is another commodity that is very, very intensively used in renewable energy. I mean, to put up the windmills and to build out the electrical grid, because remember, the electrical grids have to be reconfigured. Right now, South Africa, again, used us as a case in point, but this is a global phenomenon. We have coal fields generating coal-fired power in the Mpumalanga area of the country. That's where most of the coal fields are, and that's where most of the power stations are. Where most of the sun and wind is in the Western and Eastern Cape. So over the next 10 to 20 years, we're going to have more energy generation happening in the Western and Eastern Cape and less happening in Mpumalanga and Gauteng and the Northern Province. But the grid is configured to take energy from the east to the center to the south, whereas it has to be reconfigured to take from the south to the east and the center. So that has to happen, and that has to happen globally, because that's it's the same thing everywhere else in the world. So
level 2 thinking.
Yeah. So
because if you look at it on the surface, it seems unobvious, but what you've explained now, and steel comes into that.
Steel is a big role player in building out or reconfiguring the grid. It's a big role player in putting up these wind turbines. They are huge users of steel. Concrete is another thing that goes into it uses a lot more. I forget what the factor is. A coal plant, a coal-fired energy generating plant versus a similar megawatt of output of wind turbines. I think the wind turbines use a factor of 3 to 4 times more steel than a coal-fired energy plant. So that's what we're facing. We're facing a forced energy transition globally, a rapid energy transition, and that is a resource-hungry energy transition. And at the same time, the mines have been stopped from expanding their productive capacity.
Makes a compelling argument. ArcelorMittal's results were out today, and the share price has been under a lot of pressure. That's South Africa's steel maker. Are we to join the dots and say, maybe that's one of those twigs that you put in your bundle?
It could be one of them. I haven't looked at the results. I'm not sure ArcelorMittal is, in the global terms, a highly competitive steel maker. I think there are better ones out there in the world. But I think the simple thing is, if you're bullish on steel, then you buy the iron ore producer, the guys who produce iron ore. Like the Afrimats in South Africa, that's probably one of the best companies in the country. And it has transitioned from building materials to iron ore in a big way. And I think it's done so very correctly and very presciently.
Afrimat, is that one of your twigs?
Yeah, it is one of my twigs, yeah.
I have to ask you about transaction capital because that's now in the BizNews portfolio.
Yeah.
And I've been getting the same kind of information sent to me about transaction capital as Viceroy was putting out about Capitec some years ago. Well, the Viceroy Capitec thing has calmed down, but transaction capital, are you still comfortable? It was one of your favorites.
It was, but I sold the holding of transaction capital when it reached quite high levels. It got too expensive. During the pandemic, it got cheap, and then it very quickly got expensive. So within the space of 2.5 years, I think I initiated a position and sold out again, which is
okay. So you've told us what to do in the portfolio.
Yeah. So look, I think it's a great business. It's a well-run business. It's got good management, and they always say the highest trees catch the most wind. So successful companies like Capitec and Transaction Capital come in for a lot of criticism from people who might be jealous of their success, who might be envious of what's happening there, or have missed out on making money from the stock. So the criticisms could come from that sort of source as well. I haven't looked at it recently. Also, you have to understand when you're dealing with a company like Transaction Capital is a financial services business, so it uses leverage. There's always danger in that. Although I do think that the management of Transaction Capital is sound in terms of how they structure their book, and I don't think they're cowboys at all.
So have you got any other twigs that you're going to be telling the tribe about at BNC5?
Yeah, I quite a few, and we'll wait for BNC5 to share that for all the participants at the conference.
But you've thrown us a bone with Afrimat.
Afrimat is one of them. Yeah, I think that's a great business, great management, and it's not expensive. And it's got this tailwind behind it, which I think is very important.
Another part of the conference is the bookstore.
Yeah.
If you recall at Berkshire Hathaway, where they've got Bookworm, and Warren Buffett tells them what to put in there. Yeah. Well, we don't quite tell exclusive books what to bring, but we do give them suggestions. Yeah. Have you got any that we should be telling them about to bring along for our community to buy? Yeah,
I mean, a book that I've been reading now, it's called The Tower on the Square. It was by Neil Fitzgerald, the historian. Is it Fitzgerald? Ferguson, Neil Ferguson. Fantastic book about how power shifts over time from centralized systems to networks and back to centralized systems. And I think we're going through one of those shifts right now in the world where networks became very strong, but I think there's a pullback towards centralization happening and a fragmentation of the global economic environment. So that changes. I think it's happening. And I think Neil sets it out and puts it into historical perspective very well. And he goes right back to the start of economic activity and shows how networks and centralized systems have always interacted and the one has dominated the other one.
He's one of my heroes. I love his
Very
writing.
good. Yeah.
So I managed to get an invitation to the Financial Times place that they've got in Davos. They did a session with Neil Ferguson.
Oh, yeah. That must have been fascinating.
It was amazing, but it was on crypto.
Okay.
And what he said, and I'd love to get your thoughts on this as kind of our closing discussion. He said that if he lived in a dangerous country, he would be buying digital gold. He'd be buying Bitcoin.
Yeah.
Because he says that for many years, when you're living in dangerous countries or higher risk countries, gold has been a good hedge. And that although he doesn't own a lot of Bitcoin because he lives in a non-dangerous country, if he were to live, say, in South Africa, he would have a different opinion on it. What's your thought on that?
I agree. I think there is a role for crypto. There could be an increasing role. I'm not sure about that yet, but I think crypto plays a role. And I think the killer app, as I say, for crypto is exactly that, as a store of wealth. It's a bit volatile for that to be really called a store of wealth. But if you live in a dangerous country where the currency itself is even more volatile than Bitcoin, it can be considered a store of wealth. And very importantly, it's portable. And that's when you live in a dangerous place and you have to get out tomorrow morning and you can transfer your crypto to an exchange in London or New York seamlessly. I think that's a very valuable attribute.
He used the example of Ukraine and how it is so popular in Ukraine, and I guess for obvious reasons.
Yeah. So it makes a lot of sense.
But are we dangerous in South Africa? And if we are, of course, we're volatile. Is there still a case to be made for SA stocks versus offshore stocks?
So we are volatile in South Africa, but I don't think we're a lot more volatile than other places like Brazil or Mexico, or less volatile than Russia, I can tell you that, and Ukraine. So and the other thing that's happening in South Africa is that even last year they relaxed exchange controls even further. That's something that we lose sense of, is that South Africa has been through a process of relaxing exchange controls over the past 20 years, and that's still continuing. That last year in the budget they relaxed it by a further 5 or 10%. So it's getting less dangerous from that point of view. You can walk into Nedbank or Standard Bank or whatever your favorite bank is tomorrow and open up a foreign currency denominated account. So I don't think it's so important for South Africans at this point. We might get there. I mean, South Africa is a place that things aren't looking fantastic from an economic standpoint. So we might get there. I don't think we're there yet. And in the Western Cape, we're far from there, to be honest.
And the market generally?
And the market generally, look, while we have this massive load shedding going from stage 4 to stage 6, I think it's tough for businesses. Businesses who won't do well, they have additional costs. Their profits will be under pressure, so you can't expect fireworks. But again, if you apply second level thinking going forward, where will South Africa be in 3 to 5 years' time? I think we will have decentralized, privatized energy generation. Most of our energy will be generated on a decentralized, privatized basis. And that's very powerful. And that's where the rest of the world still has to get to. That's where they want to get to. But we're being forced to get there because of our incapable state that can't facilitate such a transition. And the private sector is doing it for themselves. And what you need to bear in mind is that we need additional power generation capacity. Whether the state spends 50 trillion rand doing it, or whether the private sector and taxes us to pay for it, or whether the private sector spends 50 trillion to do it, it has to be done. And it's going to cost 50 trillion. It's going to cost the economy 50 trillion. And that's, whatever the number is. And I actually think it's better that the private sector does it than the state does it, because it leads to a more powerful private sector.
And more efficient.
More efficient, exactly. It's in the short term, it's going to be less efficient because everyone's going to have their own little generating, solar on the roof and a turbine in the backyard and that sort of thing. But over time, that will consolidate into bigger, more efficient production energy generating units.
So if you look through 3 to 5 years, then as an investor in the stock market, you can also say maybe that isn't in the prices.
So what we're going through now, the stock market had been discounting for the past 10 years. That's why the market has done so badly, because the market is smart. It sees what's coming. And what's happening now was quite clear 5 and 10 years ago, when share prices are high, they were discounting a rosy future, but since then they've been declining as they've been working the new information into the system, and we've been declining. But we could actually be in a fairly good space in 3 to 5. There is a probability, a non-zero probability that we're in a good space in 3 to 5 years' time. And if you put a 10 or a 20 or 30% probability on that, then I think South African stocks are a massive bargain. So again, my message has always been, you can't have all your eggs in one basket. You can't, even though South Africa is super cheap, it is a risky environment and it's tough out there. So you have to be diversified offshore and onshore. But whatever your neutral exposure is onshore, say you say naught is my neutral exposure. I don't want, on average, over time, I want nothing in South Africa. Right now, I'd have 10 or 20% in South Africa.
Piet Viljoen is a portfolio manager at Counterpoint, and I'm Alec Hogg from BizNews.com.